Happy Friday, everybody, and welcome back to the Crypto Club podcast. This is our third episode. Of course, as always, we are here with Hobo. Say hello, Hobo.
Hello, hello. Pleasure to be here.
Right on. And we've got some interesting topics today as well that we're going to be going over. So make sure you guys like and subscribe so you guys can catch these early on when we release them every Friday.
Always, always. So, starting off the episode here on Cointelegraph, before we get into the story, let's all have a moment of silence for these prices. Bitcoin below 36,000, ETH below 2,700. Hate to see it.
Part
Anyways,
of the market.
all right. So, our first story, summer's blowing up. Bitcoin sees 2022 volume record amid hopes capitulation is over. Does Bitcoin have further to fall? Bitcoin calms after stocks see a situation that has only happened twice this century. Bitcoin is dipping below 36,000. Smells like capitulation, one trader says, as suspicion mounts over the United States stock markets. In a tweet on May 6th, Cointelegraph contributor Michael Van de Poppe suggested that the Bitcoin price was at least giving serious signals. I think it's very clear that all markets have been taking a hit. We're really looking at some grim economic situations. And I mean, who knows how the future's going to play out? Maybe Russia ends the war tomorrow and everything's fine. Maybe we get nuked and everything ends. I mean, really?
Jesus.
Hey, nothing is out of the field.
No, I mean, you went 0 to 100 there. So, I mean, it's interesting because considering the fact that this was a volume record for the year is actually pretty surprising. Granted, it may not be the volume record we were expecting of it going to the upside,
Right.
but I mean, a lot of people have said that what it will take is a large liquidation event and a lot of volume leaving the market in order for us to start trending back upwards. So the reality is the sooner that happens, the better.
True.
So I don't think we've hit it yet because this wasn't, even though this was a record, I don't think this is kind of what is needed for that type of mass liquidation event. But aside from that, I do think part of it in turn is also, like you said, it's related to the stock market taking a huge dive, and also just the overall global economy is not in a good state right now. So everything kind of plays together.
Right. Right. And I think a large liquidation crash is a good point. So much of the crypto market cap is built on derivatives and futures and leverage in both ways, really. But you can quickly liquidate lots of people. Because one person gets liquidated, causes the price to crash, which liquidates the next person, and you just have these cascades of liquidations that cause these flash crashes, like we saw last, like June or July.
Exactly. So, I mean, it's good to see volume in the market, and time will tell if it starts picking up from here or if we still have a longer to go. But that was really interesting though that we hit a record so far this year.
For sure. So, moving on with the story, analyst says stocks saw forced liquidation after plunging to 10-week lows in line with equities on the May 5th Wall Street trading session. Bitcoin bounced at levels last seen in February. The downturn in both crypto and stocks, which followed an initial bounce the day prior on the back of expected rate hikes by Federal Reserve, appeared to be more than the traders bargained for. The S&P 500 finished the day down 3.5%, while the Nasdaq 100 ended down 5%. Outside stocks, U.S. 10-year Treasury futures shed 1%, a rare combination that gave some market participants pause for thought. Jason Gopfert, founder of Sundial Capital Research, noted that such a chain of events had only occurred twice in the past quarter century, during the 2008 global financial crisis and the March 2020 COVID-19 crash. Someone is blowing up, and this is forced liquidation, he told his Twitter followers. Interesting signs, the only two times that this has happened have been in two of the most severe downturns we've ever seen.
Yeah, I mean, those are mass liquidation events. So the reality of it is, those are probably, if this does play out like that, that is probably something you want to keep your eyes on and be ready for that opportunity.
Right.
But
Right. The art of knife catching.
yes, and it is pretty alarming though that it is, the 2008 crash and then COVID. So as far as the rest of the world, that's not necessarily a good sign. But you gotta. There's only so much hopium you can have.
Right, right. Yep. Time in the market speaks time in the market, as everyone always says.
Yes.
So, moving on here. As such, the chain reaction roping in Bitcoin could have been the capitulation event that many had previously said was necessary as a result of changing U.S. economic conditions. That smells like a capitulation to me, or at least some serious signals overall, Van de Pop commented. He noted that the dip had also produced the highest volume 4-hour candle since early December on the Bitcoin USD pair. As Cointelegraph recently reported, volume was a key aspect that needed to return in order to produce a more convincing capitulation event. Data from Cointelegraph Markets Pro and TradingView, meanwhile, showed relative calm returning to Bitcoin markets overnight. So yeah, there's that massive volume spike. I saw a tweet from TradingView, and they had tweeted it was either the Bitcoin or the Netflix chart, and they said it's never good when the candle touches the volume, because there's a massive downwick into the volume candles.
That is true.
Yeah, yeah. So, Bitcoin long liquidations near January highs, assessing the impact of the dip on hodlers. However, it appeared that a full market reset had not resulted from the day's losses. Liquidations remained fairly tame across cryptocurrencies, Bitcoin accounting for 190 million over the 24 hours at the time of writing. This was the highest daily tally for several months, but did not surpass January's cascade to 32,000. The remaining 200 million came from altcoin pairs, data from on-chain monitoring resource CoinGlass showed. So, yep, lots of long liquidations. A lot of people getting wrecked. That's what happens when you use massive leverage. you just, no one knows what the market's going to do for sure. Sure, people can play predictions all day long, but at the end of the day, it's risking a lot of money,
Definitely.
So that about wraps up this story. A little bit of hopium for you, seeing the volume record in 2022. But let's get on to the next one. We got DeFi tokens are April's biggest losers as revenues fall and meme coins outperform. So this article starts off by saying April fared relatively well for meme coins such as Doge and Shiba Inu, but marked big losses for decentralized finance tokens including Aave and Thorchain, research by crypto exchange Kraken noted this week. Considering Bitcoin's 17% loss as a benchmark, the broader DeFi sector lost 34% on average, closely followed by tokens of Layer 1 or base blockchains at 33%. DeFi relies on smart contracts instead of third parties to provide financial services such as trading, lending, and borrowing to users. DeFi tokens have been the biggest losers on a yearly basis with over 71% in average drawdowns for investors. That is just massive. And I mean, a lot of these are so small cap that, it doesn't take a whole lot to just send them down the drain. Getting on with the story, Ether, the native token of Ethereum, over which most DeFi protocols are built, gained 3% in comparison. DeFi-centric runes slumped 51%, the most in that sector, while the minimum loss was 22%. Among Layer 1s, Solana, Avalanche, and Near Protocol slumped at least 34% in the past month. And here you can see we are below the 200-day moving average, and ever since we got below that, it has just been down, down, and down. Financial services platform SushiSwap saw a 29% drop in revenue, while those on DeFi Exchange Balancer fell as much as 66%. Their corresponding tokens, Sushi and Bao, have lost 45% and 18% over the past month, respectively, CoinGecko data shows.
So, why do you think that the meme coins are actually surviving compared to everything else and DeFi in general?
Well, I mean, I think that the heart and soul of meme coins has never been something based on utility, right? So, I mean, right now there's just tons of liquidity fleeing the markets all around, and so you've got all these different use case cryptocurrencies, and with liquidity leaving, it's not looking so great as far as predictable growth for DeFi. And so, I mean, these use case tokens are likely only going to see less users. And so, it's taking a toll on the price. Whereas, meme coins, they've never been utility focused, right? It's just all about hype. It's about community. It's about everything except utility. And so, like, sure, they're particularly turbulent. Can be very volatile typically, but I mean, when it's not based around utility, like if everyone that's holding Doge just doesn't care about the economic outlook of the world and what the rest of the market is doing, like, that's completely up to them. And because they're so community based, if the community wants to take that power and use it, like, they clearly have the ability to.
Yeah. So you're saying it's almost similar to like how NFTs perform really well whenever Bitcoin and Ethereum aren't rallying, right?
Right.
So yeah, I think that aside from the meme coins doing well, I think a lot of it's weird that they refer to. I mean, I guess it is DeFi, but when I think of DeFi, I think of like the like low market cap coins.
Right.
Um, personally, and so I feel like that aspect of crypto has actually been doing pretty decent in comparison to the overall market.
Mm-hmm.
Just like NFTs have been doing pretty good lately. So it's always cool to kind of analyze the different parallels between what Bitcoin and other different sectors of crypto do.
Right.
And some of them are inverse, some of them are directly correlated, but very interesting nonetheless.
Right. Yeah. I mean, really, there's just like there's trends in the stock market, there's trends in the crypto market, right? Like over the last 2 years, we saw a rotation from like growth stocks into recovery stocks into commodities. So there's always rotations in the stock market. Well, the same is true for crypto. Whether it's like a gaming tokens or lending protocols or decentralized swap tokens. There's all these different trends that occur.
Exactly.
Meme coins and exchange tokens were the relative outperformers among crypto sectors. Meme coins lost an average of 19%, while exchange tokens such as OKX's OKB and FTX's FTT lost just 13% on average. Privacy tokens also outperformed with 16% gains, buoyed by the likes of Monero and Zcash. I think a lot of the privacy token gains have to do with speculation about sanctions, because of course one could speculate that Russia could use Monero to get around sanctions, same with Zcash. And while OKX's OKB and FTX's FTT are only losing 13% on average, I will say Crypto.com's Crow coin has plummeted recently. I mean, it's probably down like 60% from all-time high or something like that.
Oh yeah, that one. There was a very interesting reason for that too. It was quite the drop.
Right. So yeah, and meanwhile, trading activity in non-fungible tokens increased in April compared to prior months. Even as the number of users remained the same, average daily volumes bumped 40%, while the average transaction amount increased by the same percentage as well. Popular Ethereum-based NFT collection CryptoPunks lost favor among investors, slipping to the third spot by market capitalization as the mutant Ape Yacht Club jumped to second place with $2 billion capitalization. Yeah, I think a lot of that just has to do with big brands really buying the IP, and I mean, really, they've been killing it with marketing. They've got ApeCoin, they've got the other side land mint happened. They're really making a lot of perks to owning their Ape Yacht Club and Mutant Ape Yacht Club NFTs.
Yeah, they're introducing utility and benefits. I mean, at the end of the day, that is what will help you grow any crypto project, and it's refreshing to see. I mean, it was expected too. I'm surprised it took them this long because, I mean, CryptoPunks has been pretty stagnant for a long time as far
Right.
as like any developments or utility versus, you know, Yaga Labs has been working religiously at, constantly innovating and bringing new utility to the marketplace. So they're
Mm-hmm.
being rewarded for it. It's natural and it makes sense.
100%. 100%. So let's get on to the next story here. The U.S. Blacklist mixer used to launder proceeds from Axie Infinity crypto hack. Now, this is kind of an update on the story that we touched on last week, where they found out that North Korea was responsible for the roughly 12,000 ETH hack from the Ronin bridge. And so the story is saying that the U.S. Treasury Department on Friday imposed sanctions on a virtual currency mixer. It said South Korea used to help launder stolen virtual currency as part of the country's malicious cyber activities program. For those that don't know, these currency mixers, such as Mixer or like a Tornado Cash, it essentially lets users deposit ETH into a massive pool where everyone is depositing ETH, and then people are constantly withdrawing from that pool of ETH2 with a secret password, and so it's really hard to decipher where the money is being sent, but it's definitely possible with blockchain analytics. It just makes it a much harder process, and as we see here, apparently Mixer was the platform that North Korea was trying to use to launder the money from the Axie Infinity hack.
Naughty, naughty North Korea.
Naughty, naughty North Korea. What's new?
Yeah, I mean, so everybody knows Tornado Cash. I think that's probably like the most well-known mixer.
Right.
Um, really, really curious to see if this becomes kind of like the gateway for the US to just start banning all mixers.
Yeah.
Um, the reality is that there are ways to track where the money goes. It is difficult. So it's out of reach for 99% of people, but I mean, it's the US government. It may be better for them to just hire, like specific individuals to help trace that and stuff, but
Mm-hmm.
overall just it really came out of left field. Like when I saw the headline for this, I was pretty surprised that they had gone to these lengths and banned Blender.
Right.
So
Yeah. I agree, but I'm also not surprised, especially when it deals with, countries using them, especially like launder money from a major exploit. But, that goes to show maybe next time they use Tornado Cash and Tornado Cash is next. Who really knows?
yeah, I mean, like I said, I'm sure it'll become like a stepping stone that they build off of and just start going for all of them.
Right.
Um, the interesting part is I don't necessarily see what the U.S. gains from this other than just deterring future hackers.
Mm-hmm.
You know what I mean? Like this doesn't directly affect North Korea at this point.
Right. Yeah, no, definitely not. Interesting nonetheless, and I guess we'll see what comes out of it. Moving on to the next story here, we'll touch on this. Opera browser enables direct access to BNB chain-based dApp ecosystem. So the new integration with BNB Chain allows Opera users to access decentralized apps, including dexes like PancakeSwap, OneEdge, and BuySwap. And this is quite interesting because Opera is available on all devices. And if you used to use Trust Wallet, you would know that they used to have a Web3 browser built into the app on iPhone, but it actually got removed. And so, as far as I'm aware, Opera is going to be the first browser back on iPhone that's going to allow users to access crypto through a web browser and really tap into those decentralized applications, not just trade.
Yeah, this is huge. I mean, there's a lot of mobile users as well that for the most part have been pretty neglected by crypto.
Right.
I mean, most crypto platforms and exchanges, like it's really difficult and cumbersome to use their apps or just to trade from your browser or to trade through like the internal MetaMask browser. So, I mean, this is a welcome sign, and I think it might be a step in the right direction as far as bringing more users and retail money back into the space.
Mm-hmm.
It's funny you mentioned Trust Wallet because I remember when they banned the browser. I didn't update it for like the longest time just so I could keep using it.
Nice.
And then one day I just randomly hit update all in the App Store and I forgot about it, and so I
Yep.
lost the access to it.
GG.
Exactly. But I mean, it's a good sign. Apparently, I mean, it seems here in the article that Opera has 350 million users. Um, or so yeah, 350 million users, and apparently they'll be able to purchase a BNB token as well with fiat and send it via the Opera crypto wallet as well. So I mean, it just sounds pretty convenient, and hopefully like I said, it brings more utility and more space and more eyes and more investors into this space.
Right. Yeah, it'll be interesting to see if they allow access to other chains, because right here it's only talking about the BNB chain.
Yes.
Well, let's see. Actually, right here it says the browser company. And let me back up a little bit. The Opera crypto browser's BNB chain integration follows the beta release of Web3 browser for iOS devices, iPhone, and iPad in April. Opera began the crypto browser project earlier this year to focus on Web3 and facilitate navigation across dApps, games, and metaverse platforms. The browser company has since expanded support for 9 major blockchain ecosystems: Bitcoin, Solana, Polygon, StarkX, Ronin, Celo, Nervous Network, and now BNB Chain. According to BNB Chain's Patrick Degenhardt, the primary aim of the Binance Chain community is to create the infrastructure for the world's parallel virtual ecosystem and entice the next billion individuals into cryptocurrency. He added that boosting the adoption of digital assets and blockchain technology requires major efforts on Web 2 and Web 3 integration. I think that's a excellent statement at the end. Requires major efforts on Web 2 and Web 3 integration, right? Because, I mean, really, what's the use of crypto if you can't bridge it with Web 2, where you're going to get a lot of those actual services that people, are so used to using?
Exactly. And it's going to take, again, great minds and new investors and innovators coming into the space to help us bridge that gap between Web 2 and Web 3.
Right. But, yep, that about sums up this article. Let's get on to the next here. So, this one's saying that Virginia County wants to put pension funds into DeFi yield farming. So, the next few days we'll see a decision made, which, if approved, would be the first time pension fund money was used in decentralized finance. The Northern Virginia County of Fairfax has already invested a part of its pension funds into crypto and blockchain startups. Now it's mulling over deeper involvement with decentralized finance yield farming. The Fairfax County Police Pension Systems Chief Investment Officer Catherine Molinar said on Tuesday at the Milken Institute Global Conference that the system aims to fund 2 new crypto-focused hedge fund managers in the next 3 weeks. The next few days we'll see a decision made, which, if approved, would be the first time pension fund money was ever used in DeFi. According to Molnar, Fairfax has already committed pension funds to 7 crypto allocations across 2 pension funds, including venture capital funds and one structure that holds early-stage illiquid tokens and a later-stage liquid tokens. A different approach to profit from volatility is one of the 7 categories. It includes a hedge fund that employs various techniques in cryptocurrency, including yield farming, basis trading, and cross-exchange arbitrage. This little part here that talks about holds early stage illiquid tokens. I think that is super interesting. That really shows that they are not just farming in DeFi, they're really digging in to the dirt of DeFi and finding those super small tokens that seem very promising, and they are actually investing parts of pension into it.
It's kind of crazy when you think about it.
Yeah.
I mean, I just had a crazy idea in my mind. I mean, eventually, let's say crypto does take over and it becomes like the global currency, whatever it may be, Bitcoin, Ethereum, the newest crypto coin that comes out later.
Right.
But and then you have these institutions that are, taking these pension funds and investing them. It'd be interesting to see because you always see like states and even further down like cities adopting, their own state mascot or their own state, football team, whatever it is. There's like a state kind of not competition, but like sentimental investment.
Yeah.
I wonder if you'll start seeing like different states promoting and endorsing different cryptos. Like imagine like Virginia becomes like a big Doge
Yeah. Yeah.
proponent
Yeah.
to the point where like even on their license plates you start seeing Doge on their license plates, and then that could go for any crypto, and it would just be so crazy to see that.
Yeah.
But based on this article, I could see that playing out. I mean, if you think about it, everybody's pension funds are, going into certain tokens, and it makes you feel like you own part of that token. And so it would be really cool to see that for sure.
Right. Yeah. Virginia just puts all their pension money into some microcap coin, and everyone's shilling it on their license plates.
Exactly. And the second part that's interesting is, right, that they're hiring, 2 crypto focused hedge fund managers. That's really interesting to me. Like, what are these positions paying and what are the job requirements?
Right.
Because I've always thought moving forward as we get closer to mass adoption, the people who are really knowledgeable and experts in the crypto field, I wonder what the demand is for them now, and also what the demand for them will be in a few years once it really picks up. So, if not now, maybe later on after the podcast, I'll probably be looking into that to see if I can find like a job listing so we can talk about it for next week.
Yeah.
But I'm curious to see what these governments and agencies and cities are paying these, crypto experts for management and consulting information.
Yeah. I mean, it's a little personal anecdote. I know that in my hometown, the school district actually hired a cryptocurrency advisor to advise some investments into crypto.
Wow, so you have like the school district from your hometown investing in crypto?
Yeah.
Oh God.
Yeah. Right.
That's interesting.
Yeah. At the top.
At the top too, horribly. Wow.
Yeah. But yeah, quite the interesting story.
The other scary part too is, I mean, like you have 2 people. I mean, I don't know. Like, are they if they're doing illiquid tokens? I mean, they have to have a MetaMask account at that point, I would imagine, or some kind of like decentralized wallet.
Yeah.
So like you have these 2 people in charge of these massive wallets.
I mean, it could be a multi-sig,
Potentially. I mean, it would seem pretty cumbersome to have a multi-sig in
Yeah.
that kind of situation, right?
Yeah, but I mean, at
Like,
the same time, like, these hedge funds have people managing, hundreds of millions of dollars.
like imagine you invested in some low market cap coin and you have to call your supervisor, Brenda. Brenda, we're getting rugged on this coin. Authorize the transaction.
Yeah, right.
Like,
Yeah.
I don't think they run that. I think that it would just like there's a lot of responsibility on those hedge fund managers, I think.
for sure. I mean, it's playing with a lot of money.
Yeah, but I don't think they're running multi-sig because it would just be like really, really cumbersome to work around that.
Sure. Yeah. Yep. No, that's a good point.
Yeah, we'll do some more research on that kind of stuff, and we'll talk about it next week because I'm actually pretty interested to see how that works in the real world.
Totally. Totally. So moving on to the next story here, we got SEC doubles down on crypto regulation by expanding unit. The crypto assets and cyber unit of the SEC's enforcement division, which is tasked with policing cryptocurrency firms, will add 20 people to its staff. The United States Securities and Exchange Commission announced Tuesday that it would nearly double the number of personnel responsible for safeguarding investors in cryptocurrency markets. As per the announcement, the SEC's cyber unit, which includes the crypto assets and the cyber team, will hire 20 new people for 50 dedicated positions. The SEC stated that the 20 hires would include investigative staff attorneys, trial lawyers, and fraud analysts. Chair Gary Gensler praised the appointments as long overdue and essential to overseeing one of Wall Street's newest and most popular sectors. This is welcome news to many who have been concerned about the potential for market manipulation and other fraudulent activities in the crypto space. In recent months, the SEC's crypto unit has successfully brought dozens of cases against those seeking to take advantage of investors in crypto markets. Gensler stated, adding, by nearly doubling the size of this key unit, the SEC will be better equipped to police wrongdoing in the crypto markets while continuing to identify disclosure and controls issues with respect to cybersecurity. I think that adding 20 new people for 50 positions is still massively undercut. I mean, there are tons of tokens deployed every day, tons of schemes. I mean, first off, they have a lot to catch up on, right? If they really want to dig into that. I mean, I wouldn't be surprised if in a couple of years we saw thousands of SEC employees just for DeFi.
Oh, for sure. I mean, they're gonna have to eventually hire CoffeeZilla.
Right, right, yeah.
But I mean, my biggest takeaway from this article is how little understaffed the SEC really is for this. I mean, that's crazy. Like you said, 50 positions is nothing compared to what is going on in the crypto markets. I mean, at all. And I doubt these guys are really high level anyway.
Mm-hmm.
So imagine that it's really something that does need to happen for us to kind of gain, mass adoption. But it goes to show you how far behind governments and institutions are.
Mm-hmm.
That I don't think it'll happen relatively soon because of that.
Right. And I mean, for those listening, just a little bit of background. Gons and I tend to trade on Ethereum quite frequently. And, I mean, I know that we see scams on Ethereum daily. And, Ethereum is just one out of many chains, right? Like there's BNB, where there's thousands of tokens deployed every day.
Woo.
Probably 90% of which are,
99% are scams on BSC.
Yeah. I mean, still, that's just two chains, right? Like there's so many different blockchains. Just, I mean, thousands of tokens being deployed every day. Probably thousands of scams as well. The SEC's got some work to do. Sure, not all of them are taking place in the U.S., but at the end of the day, they are all a risk to U.S. investors.
Absolutely. And yeah, they've really got to do their homework and catch up big time.
Right.
50 ain't cutting it.
Nope. Nope, definitely not. And they're like tweeting like, wow, we just added 20 members.
Yeah, I see that. Like they're tweeting about it like, look at us.
Yeah.
You happy?
So yeah, the article goes on, says, however, the news hasn't gone down well with crypto mom SEC Commissioner Hester Pierce. In a tweet responding to the SEC's announcement that new crypto cops will be added, she pointed out that the agency is a regulatory agency with an enforcement division rather than an enforcement organization, and asked why her employer was leading with enforcement in cryptocurrency. So Hester Pierce says, The SEC is a regulatory agency with an enforcement division, not an enforcement agency. Why are we leading with enforcement in crypto? And, I think that's a good point. They're kind of jumping the gun with this bolstering of their enforcement division just because the regulations still aren't quite clear. Like, you're really enforcing laws that people don't know.
Exactly. And they have so much to catch up on that it is pretty, she does have a point.
Right. Sure there's, some givens, like it doesn't take a genius to realize the token is a fraud, but there's a lot of really small nuances that could be crossing lines with the SEC that a lot of people just don't know about,
Exactly.
So Pierce is one of the most vocal advocates for crypto regulation at the federal level in the United States. Rather than focusing on enforcement, she has advocated for crypto regulation. In August, Pierce slammed the SEC for a $10 million settlement with crypto exchange Polynex in a public statement, emphasizing the opaque regulatory environment that cryptocurrencies must navigate in the United States. SEC Director of Enforcement Gerbir S. Gruel said that the majority of crypto-related securities fraud victims are individuals. According to Gruel, cyber attacks continue to pose an existential risk to the U.S. financial system. The bolstered crypto assets and cyber unit, he said, will be at the forefront of safeguarding investors in the broader markets. Really, I see their 50-man team as a puny effort. I don't know if there's some organization outside of the SEC that is handling larger cases of this, or maybe they'll contract third-party companies. But it'll be interesting to see what happens here.
Yeah, that's again. It seems like the general idea here is that they should be focusing their effort elsewhere. But we'll see what happens and how they handle things moving forward. But definitely, they're either going to have to bring on way more people, or they're going to have to, contract it out to third-party companies. Sure.
Right. Yep. Well, let's see. Moving on to the next story here. We talked about this briefly last week, but this story is talking about Coinbase taking action against front-running of new crypto listings and zero-tolerance policy. So recently, we have mentioned that some people have been aware of insider things going on at Coinbase just because it's available on the blockchain, right? And although it is technically public information, it is information that is extremely hard to find unless you know what you are looking for. And so this article starts off by saying digital asset exchange Coinbase will take action against front-running of new cryptocurrency listings on its platform as part of its zero-tolerance approach. In a company blog post, CEO Brian Armstrong announced new measures of listing and reviewing tokens on the platform to prevent traders from examining its listing information or software to guess what assets would be listed in advance of the wider market knowing. This included using on-chain data to check if Coinbase is testing new asset integrations. We're also aware of concerns that some market participants may be taking advantage of information from our listing process, Armstrong said on Thursday. While this is public data, it isn't data that all customers can easily access, so we strive to remove these information asymmetries. We're adding new forensic tools to better prevent front-running, while also ensuring that we can move more quickly to delist assets that appear to be run by bad actors, the company tweeted. So essentially, they're just trying to stop the edge that insiders have regarding knowing if a token is going to be listed on Coinbase. Just really trying to stop insider trading, which we'll see if it actually happens, right? Because that's just something that happens everywhere. You look at Nancy Pelosi, somehow she's able to outperform like every hedge fund manager.
Yeah, you'll never get rid of it. It just seems like they're attempting to minimize it, basically. But yeah, we talked about it last week. There was that guy that made crazy amount of money just basically finding out which coins were going to be listed on Coinbase before they were, and just buying up a lot of them.
Right. Yeah, and for those that don't know, if you're in some DeFi token and it's announced that it's going to get listed on Coinbase, I mean, depending on how small the token is, it could very well 10, 20x overnight. But
Yeah, so I mean, it's good that they're adding these extra measures to limit, you know, what goes on. And at the end of the day, what we have to realize is part of what is not killing the space, but inhibiting the growth of crypto is greed.
mm-hmm.
And so we keep telling these newbie or normie investors, "Hey, come into crypto, come into crypto. It's so good." And what's the first platform they use? They use Coinbase.
mm-hmm.
And unfortunately, what ends up happening to a lot of the new people that come into crypto is you do get wrecked.
Yep.
And
Yeah.
I mean, you hear this new token that just launched today on Coinbase. You don't know any better. You're thinking that's, the starting price of it. And then all of a sudden you're getting like a $50,000, bomb dropped on you by
Right.
some guy who bought, $5,000 yesterday. And the reality is that yes, the strong do survive and they learn, and then they go into DeFi and they learn from those mistakes and those failures. But that is not how the world works. The world is not filled with entrepreneurs or successful business owners. There's some grit involved in being an investor in crypto at this current day and age,
mm-hmm.
and that same level of grit is mirrored in the real world. And so if we really want mass adoption, like we have to push for these kind of updates and regulations in order to protect the little guys, because at the end of the day, that is what's going to help us get the ball rolling and move towards mass adoption,
Right.
which is ultimately the goal for everybody in the space. So unfortunately, greed kills it, and all it does is just hurt the people that we're trying to attract. So it's very backwards.
Totally. Yep. I agree 100%, but, it's also worth mentioning greed inhibits a lot of things. And,
Oh yeah.
I think it's natural for greed to be present until, like there's regulations that can mitigate it, right? Like it's always going to exist, but really it's just going to take development, both technologically and culturally, to, mitigate
To get us there,
such
yeah,
things.
for sure.
So let's get on to the next story here. Cryptocurrency mining is poisoning our communities, U.S. representative says. Rhetoric dividing the crypto critics and proponents has been galvanized by dueling letters sent to the Environmental Protection Agency, which put a spotlight on crypto mining. On one side, 23 Democratic members of Congress co-signed a scathing rebuke of the mining industry's purported environmental and community impact. Their letter, submitted last month by Representative Jared Huffman, DeKalb, asked the EPA to ensure that crypto mining outfits across the U.S. are operating within environmental regulations, particularly the Clean Air and Water Acts. Huffman said the crypto-inspired reopening of gas and coal power plants, such as Green Ridge in upstate New York and the Hardin plant in Montana, undermine our battle to combat the climate crisis. While some facilities claim to be cleaner by creating energy from coal refuse, these coal-fired power plants still emit hazardous air pollutants and leak toxic contaminants into our waterways, Huffman wrote. Cryptocurrency mining is poisoning our communities. Yeah, yeah, I think it's fine asking, companies to just participate in the regulations that are already in place and just ensure that they are doing so. But a lot of the buzz regarding mining in the news is how bad it is for the environment. I mean, really just comes down to where the energy is coming from, right? If it's clean or dirty energy. And furthermore, in reality, crypto and DeFi essentially eliminates the need for banks for the most part, right? Like it gives everyone a place to store their money safely, and the banking system as a whole takes up so much more energy than crypto does. It's really I don't know. I think it helps to look at it in that light.
I'm gonna have to bite my tongue on this one for a bit. What I will say is, I mean, this is just a really ignorant take on the situation. Aside from what you mentioned, which is absolutely right, that the banking industry probably is far worse for the environment. You also have to factor in that crypto is slowly shifting towards a proof of stake um, method versus currently proof of work. So that will definitely help a lot of the pollution aspect of crypto mining.
Right.
But I mean, this is really, yeah, this article is just very, or I guess the article is more on this guy's statement, this representative statement from California.
Yeah.
Um, this just seems like a really half-assed, ignorant take on crypto mining, and at the end of the day, it is something that, especially once we go proof of stake, that's gonna really shift everything, and I think we'll start to see a lot more like positive articles and takes as far as crypto mining.
Yeah.
But I mean, this also, even in its current state, it's not even that bad. I mean, it's almost like blaming the fork because you're fat, honestly.
Mm, I
So,
mean, yeah, but no. Like, I get what you're saying, but also, uh, I don't know. I'm all for making sure that companies stay in line with current regulations.
oh, they should. Like, don't get me wrong, but this is such a nothing burger because it's so minimal compared to way bigger issues if you want to really touch on climate control and climate change.
Right.
That I don't think crypto mining accounts for nearly what people are making it out to be.
Yeah.
The interesting part, kind of shifting the subject away from that, is I did see what's oh having a brain fart. What's the guy's name from Shark Tank?
Uh,
Kevin
O'Leary.
Kevin O'Leary, yeah. He did like a really good take on stage at Crypto Miami, I think,
Mm-hmm.
where he was talking about how a lot of the a lot of the dams we have in the U.S. are basically just they're potential power sources if we
Right.
did hydroelectricity, and we set up these turbines. I mean, and he was talking about how that could really help the U.S. economy and also kickstart like a large crypto mining movement for the U.S. economy. I think that would be massive. I mean, he was definitely onto something in that,
Yeah.
and I definitely recommend you guys check out his segment from Crypto Miami on that because it was really, I thought it was a really good idea and it was really well thought out. But there's so many different solutions for this, and there's already again proof of stake coming that you're kind of just beating like you're beating the dead horse unnecessarily, and it's not even a horse, it's like a pony because there's far worse there's far worse things in the
Sure.
world contributing to climate change. But yeah, that's my take on it.
Yeah. And I mean that just makes me think about El Salvador doing their volcano crypto mining.
Yeah, that's sick. Like El Salvador's really leading the way with crypto in general. I'm actually really like proud of them.
Mm-hmm. I totally agree. But let's get into this next story here. We're talking about Tron's stablecoin launch could be a significant catalyst, and it clearly was because Tron rallied, I want to say, 25% just before Bitcoin had its recent leg down. But anyways, the story says Tron is a $6.35 billion cryptocurrency launched by Justin Sun in 2017. I suppose I should clarify that's its market cap, not its actual price. Predating many other popular cryptos, and while it does not have the buzz of the likes of Terra or Solana, that doesn't mean it isn't innovating and bringing new development into its ecosystem. Tron made a major announcement last week that a new stablecoin, USDD, which stands for US Decentralized Dollar, will launch on the Tron network on May 5th. This news drew significant investor interest, and Tron rose 7% following the news at a time when many other cryptos are in the red. The launch should attract more users to the Tron network, which will be beneficial for Tron investors. Let's see. What is USDD? The Tron stablecoin will be algorithmically backed in a similar manner to Terra's Terra USD stablecoin. Fiat-backed stablecoins such as USD Coin are backed by an equivalent dollar amount in the bank. On the other hand, algorithmically backed stablecoins are not backed by physical dollars, but instead utilize algorithms to balance supply and demand by incentivizing traders to keep the coin's price stable. Here's how it works. If USDD falls below its peg to $1, traders can exchange one USDD token for $1 worth of Tron. If USDD rises above $1, traders can exchange $1 worth of Tron for one USDD. In theory, accruing these small but guaranteed returns should mean high-frequency traders and arbitrage traders should be able to maintain USDD's price within a narrow band around $1. And it doesn't look like this article gets into it, but I remember seeing in the news that, here we are. The popularity of Terra USD has been a game changer for the Terra network and the price of Luna. Terra pays 19.5% APY interest on Terra USD held in its anchor protocol, which has played a significant part in attracting users to the network. Tron is upping the ante and offering 30% interest on USDD, which will reportedly launch on May 5th. It's doubtful USDD will supplant Terra USD or that Tron is even trying to, but it is likely that this will attract more crypto investors into the Tron ecosystem. So, 30% interest on a stablecoin is, that's insane. We were talking about the Virginia wanting to start investing pensions into yield farming and DeFi assets. Maybe Tron would be a good place to start.
Virginia's drooling right now.
Yeah, totally. Luna's UST farming has been a huge catalyst for why it's surged so much over the past half a year. 30% interest on a stablecoin is more than 50% more than Luna offers, so it'll be interesting to see what effect this has on not just the price of Tron, but also the user base.
How much more is it than Luna?
Well, Luna is 19.5%, Tron is 30%, so it's more than 50% of a difference.
Yeah.
It's like 52% more, something like that.
The reality of it is I don't see that being sustainable. That's really, like we touched on it earlier, that's part of the issue that Crow had, right? Is they were offering, especially for their higher tier credit cards, they were offering 8% cash back on any purchase if you held $400,000 in Crow. That's just an absurd amount. And it becomes unsustainable once the hype dies because it's backed by new users buying in. It's not backed by legitimate protocols and actual measures being in place to sustain it.
Right.
So 30% sounds ridiculous. Me personally, I think if this is sustainable and it's surreal, I'm all in.
Yeah.
Right? I'm following Virginia and I'm going all in on this.
Yeah. You're beating hedge fund managers at that point.
Dude, you're beating everybody.
Yep.
There's a saying, if it's too good to be true, it probably isn't true.
Right.
Right. I look forward to Tron proving me wrong on this, but this just sounds insane. Put it that way.
Yeah, no, I definitely agree with you. And there's questions too as if Luna can even sustain its 19.5%.
Correct.
So we're just gonna.
Well, I don't know if it was Luna. I remember I follow so many different people in the space, really knowledgeable people that are experts in their specific fields.
Right.
And I remember this one guy who is really good at farming. All he does is just farm in DeFi. And he was talking about, and I don't know if it was Luna, but it's actually irrelevant whether it was Luna or not. But one of these protocols that was offering a really high APR for staking and farming. They were offering some crazy yield, and the reality is that on the months where crypto was downtrending, they were actually paying that out of pocket because they simply it doesn't work that way in real life.
Yeah.
And it's only sustainable for so long. Like if crypto remains in a bear market for the rest of the year, that protocol is shutting down because they're not just going to keep paying out of pocket. It's ridiculous. So, and I can assure you they didn't have a 30% yield. So how Tron plans to do this, you know, more power to them. If they can back it up and do it, I will be 100% on board.
Yep. No, I definitely agree, and it'll be interesting to see how it plays out. You know, maybe it holds up and proves us all wrong, and Tron becomes the savings account.
Tron overtakes Bitcoin.
Yeah. Yeah.
I mean, the reality is that it will probably succeed the first, few months
For sure.
because everybody's hyped about it. Everybody wants to try it out. But what happens when people start taking profit?
Yeah.
That's where it boils down from speculation and hype into real utility and actual protocol. And I don't see it happening. It hasn't been done yet.
We shall see. I guess it's went live May 5th, so today is May 6th. Maybe we'll have to take a look.
Yep.
But getting on to the next story here, we got the dominance of Uniswap v3 liquidity. New research published today shows that the Uniswap protocol v3 has deeper liquidity in ETH/USD, ETH/BTC, and other ETH pairs than leading centralized exchanges. This research demonstrates that automated market makers' market structure, which is largely crypto native today, can surpass order book exchanges and transform traditional financial market structure to be more liquid, stable, and secure. For ETH and USD, Uniswap has around 2x more liquidity than both Binance and Coinbase. For ETH/BTC, Uniswap has about 3x more liquidity than Binance and 4.5 times more liquidity than Coinbase. For ETH/midcap pairs, Uniswap has on average 3 times more liquidity than major centralized exchanges. This is super interesting to me because it essentially, it's talking about these bigger tokens in DeFi being more dump proof or pump proof than they are on centralized exchanges, right? I don't remember what it was to, but I think it was on Coinbase, Bitcoin wicked down to 12,000 or something for a split second, and it was seriously the smallest wick, and it instantly shot right back up. But that's what can happen when a massive whale sells off into an exchange that just doesn't have enough liquidity to really support that.
Yeah, I think people really sleep on Uniswap. It's massive, massive, massive. And I knew they were big, but definitely seeing the numbers, I didn't but I think Uniswap, I don't want to get this wrong, but I remember doing some research for something, and I was looking into the top exchanges based on daily volume, and you'd be surprised, Uniswap ranks really high. It's almost, technically considered like a top tier exchange as far as daily volume goes.
Yeah.
Crazy.
Yeah, it is super interesting. It's also interesting to me that there aren't really too many competitors. I suppose you could say that 1inch is a competitor, for example. They're probably the second highest. But Uniswap just outperforms them in terms of liquidity and TVL by so much more. There's just
crushing it.
Yeah, nothing really comes close. So the article also goes on to say the research also finds that many stablecoin pairs have much more liquidity on Uniswap v3 than centralized exchanges. For USDC/USDT, Uniswap v3 has about 5.5 times more liquidity than Binance, which is just absolutely massive. Uniswap v3 also has higher market depth across all price levels, which means it's even more advantageous for users to execute larger trades on Uniswap v3 relative to centralized exchanges. For an ETH/dollar trade size of 5 million, for example, the savings would be around $24,000 given the expected price impact difference. Traditional market structure is dominated by a few market makers, but easy liquidity creation, AMMs, dramatically lowers the barrier to create and participate in markets. This unlocks new and existing forms of value for communities and individuals. So, definitely an interesting and unique piece of research and insight into the logistics of the crypto market. I think that's crazy that it's more advantageous to execute like a massive trade in DeFi than it is on an exchange. I think that's the opposite of what the average Joe would imagine, because DeFi is really known as dangerous, and to an extent it is, but it also has its own advantages.
Definitely. And a lot of people too, you have to remember that Uniswap does incur Ethereum gas prices as well.
Right.
So, you are talking about like $100-$200 gas fee depending on what the, gas price is at the time of your trade.
Mm-hmm.
But even on like lower gas days, it's like $30, $40, $50 just to swap like Ethereum to USDC.
Right.
So it does have its drawbacks, but the liquidity is definitely there for the bigger whales, and it ultimately just goes to show you that probably a lot of the reason you see whales withdrawing funds from exchanges is not only for the peace of mind and security aspect, but also it's from a liquidity perspective.
Mm-hmm. Yeah, I really don't think that the people that are taking advantage of the deeper liquidity are too concerned about gas prices, right? Because if you're at that point, you're trading massive amounts of funds. But, surely for the smaller fish, those $50 to $100, $150 gas fees can add up quite quickly.
Oh, definitely. But yeah, the people trading 7-8 figures on Uniswap, they don't care about the $200 gas fee.
Yeah, for sure. Yeah, that wraps up our last article. We will end this podcast on a plug for the CoinScan.com beta. As always, save yourself from malicious tokens. Use CoinScan.com. We show you developer transactions live as they happen. We show you pending transactions as far as buys and sells. We give you a live feed on the token taxes. Here you can see it's 0% buy, 0% sell. We tell you if it's a honeypot or not, also known as is it sellable. Just lots of benefits to using CoinScan compared to your favorite charting platform. Currently, we are only supporting ETH, but we will quickly be bridging over to popular EVMs such as Binance Smart Chain, AVAX, etc.
Definitely. And in the Wild West, where you have, 100 tokens deploying every day and 95 of them are scams, you definitely want to have somebody watching your back, and your bank. So
Right.
make sure you check out CoinScan. It's free to use for now, and it's definitely something that me personally has helped me greatly as far as trading in the DeFi space and trading low liquidity, low market cap.
Yeah, no, I definitely agree. Really the ideas for all of the different functions that CoinScan does came from us as a team asking ourselves, what can we do to save ourselves money? Like if we were to build the ultimate trading platform, how could we make it the most advantageous to normal traders? And so really that's our mission, is to just level the playing ground for everybody. There's too much malicious actions going on in DeFi, and we do what we can to circumvent that. So, in the Wild West, choose the Wild Best. But, yeah.
All right.
Thank you guys for tuning in. This has been Gons and Homo from the CoinScan team. Happy to come at you with another Crypto Club, and we will see you next week.
See you later.